Everybody, this is Jim at SP500chart.com, where we use time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. Before we take a look at today's chart, which we're going to again do pretty briefly because nothing really changed today, but I need to read this to you anyway, and that is: the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy that draws lines on charts. So let's just take a look at the excitement that took place today. I guess you could tell by the way I said excitement that I was being facetious. By the way, facetious is a very interesting word. It is the only word in the English language that uses all of the vowels once and in order. And if you want to say facetiously, you could say sometimes why. So anyway, look, what's there to say? Frankly, I mean, we're looking at this little lower line here as the first sign that things are going to break. We had that little momentary dip again early in the session today, and then it quickly recovered, and we're now above this line. My best advice is really, well, I'll just say it again to keep you from having to look up the weekend video, because the weekend video I get kind of long-winded anyway. This is our first line to watch for signs that we are starting a leg down. And this green line is the next line to watch. So really what we've got right now is I see this blue line as still being resistance, because it has a number of touches on it that go back a little ways here. You can see it right here. I've got to move it. There we go. Boom, 2, 3, 4, and maybe 5. Maybe we're doing a little double tag, and you see we've done that before back in March, pretty much. So I'm thinking that line still should offer resistance. If it goes, then this red line would be resistance. So the reason I'm bringing this out is that where we sit at the close today, we have resistance at this blue line. This green line would be resistance as well, but I doubt we're going to jump up. Famous last words. Something tells me we're not going to gap up tomorrow and tag that green line early in the session. And what is more likely to happen is the red line gets reached first. So we have resistance on this line, resistance here and here. We have a little support here, and support here and here. So really, if you look at this chart and you see where the S&P is currently trading at 1633 and change, every trend line that is above that is resistance, and every trend line that is below that is support. And right now, we really have no way of knowing, because we're not dealing with a large pattern that has any kind of predictive quality to it. We are simply looking at these trend lines. Now, one of my subscribers brought out an interesting point and said that could it be that this move, this dip right here that had a resistance line at about 1598, that dipped down to roughly a little below 1540 and then came back to 1598, then took that out. Could this be acting as kind of an inverted head and shoulders pattern? And I guess the answer to that would be, yeah, I guess it could. It's not really it's not really an inverted head and shoulders, only because there never was we only had one touch over here to the left side. So typically with an inverted head and shoulders, we would have a move up to resistance, a dip, come back to resistance, then a deeper dip, back to resistance, then a shallower dip. So if we ignore that there was no left shoulder over here, then there still may be some validity to the simple fact that the amount that this dipped underneath this line could be pointing to the degree that the S&P eventually gets above it. But I wouldn't put quite the same amount of stock in that, no pun intended, as I would if it were a really well-shaped pattern, which this just isn't quite. It just doesn't quite have all the criteria. But regardless, I think the things that we're looking at will still hold out. So if this does work like an inverted head and shoulders pattern, and it points us to an eventual move up to about 16, I don't know, where we'd be looking at 1650, 1660, something like that, then I think these channels will continue to work until that level were to be reached. And if these channels start to break down, then that tells us that this isn't going to act like that. So, guys, I think that's about all we really need going into tomorrow's session. You can see that that there's that little dip, again, not technically significant. Then we recovered, got back, got a little bit over it. And remember what we've mentioned before is that sometimes the markets tend to act like a piece of spring metal. There may be a natural oscillation to things, but if we get above, then we're liable to spring back a little bit deeper when we come back down. So maybe we're seeing just a little bit of the stasis that has been in this blue channel between this line and this line. Maybe we got a little ahead of ourselves back through the 8th and 9th, and now we're getting just a little bit more of a reaction, and then a little bit more of a reaction. So let's see what happens. I can tell you this, that the market can, this just kind of goes without saying, the market can't go down too far without breaking this line right here. So so it goes without saying, as long as we stay above this guy right here, I'd say hang with it if you're long. And again, no real obvious concrete pattern. We don't have anything to go on right now. I think we at some point will, and when we do, I suspect this 1540 line will be an important part of that. And if we keep going up much higher, then it actually could become even more and more important if we were to have a serious sell-off that takes us down to this 1540 level and it eventually breaks. Remember now, when you have a reversal pattern, the height of the pattern, whether it's a bottom reversal or a top reversal, the height of the pattern determines the minimum expected target when that pattern breaks. So what I'm saying is, if 1540 ends up being a neckline in a head and shoulders, if we had only gotten up to a 1596 like I thought at one point, and then we broke down, well, we're going to come down to about 1490, 1488, and then it could reverse back up, okay? Because that would have been the height of that pattern. But if we are building something that is taller and longer now, then if it breaks, it would point to a more serious downside target that could be pointing to not just an intermediate top, but potentially a top that would turn the markets down for an extended period of time. Again, right now, we don't see enough to make that call, but we've got a couple of horizontal support lines right here that we're well above, and it's been a while since they've been tested. So guys, let's just hang with it, stay with these little channels, and so far they're working great. So if it ain't broke, why try to fix it? Thanks for watching, and thank you for your support.